company spends millions of dollars into the ground but finds nothing, no oil, no gas, no minerals. Now, here the real question, where does money goes in accounting? Is it expense? Is it asset? Or is it just loss? This is exactly what IFRS 6 exploration and evaluation of mineral resources explain. In this video, I will explain IFRS 6 in simple words step by step. So, if you are learning IFRS for the first time, you will understand it clearly. Let's begin our video. Our agendas of our video. In this presentation, we will cover IFRS 6 step by step. First, we will understand why IFRS 6 is important. Then we will discuss its objectives, scopes, key requirement, introduction. After that, we will talk about impairment, common mistakes, and exam focus points. And finalize our topic with summary. By the end of this presentation, you will clearly understand how IFRS 6 works in real life. Now let's move forward for overview of IFRS 6. What is IFRS 6? Let me explain. IFRS 6 deals with exploration and evaluation of mineral resources. This is the stage where companies are still searching for oil, gas, or minerals. At this stage, companies are not sure whether the project will be successful or not. IFRS 6 allow companies that are adopting IFRS 6 for the first time to continue using their old accounting policies for exploration cost. This avoids changes and confusion. However, IFRS 6 adds special rules for impairment testing and disclosure, so financial statements remain reliable. This is the overview of our IFRS 6. Now we will discuss about its importance, why and how it's important. Exploration activities are very risky and very costly. Companies can spend millions of dollars without finding anything. Without IFRS 6, companies should be hidden loss. There's a huge possibility of this, or show assets that are actually worthless. IFRS 6 protect investor by ensuring that companies do not hide their losses or showing the assets there which really don't have worthless. Clear disclosure of risk, honest financial reporting, and in IFRS 6 protect investor by ensuring the property valuation of exploration assets, clear disclosure of risk, and third, honestly financial reporting. This is how it's important. Next, we will move forward to our objectives. The main objectives. What are the main objectives of IFRS 6? The main objective of IFRS 6 is to explain how companies should report and report exploration and evaluation costs in the financial statement. IFRS 6 required companies to make limited improvement to their existing accounting practices. Exploration assets for impairment, measure impairment using IAS 36 and provide proper disclosures. These disclosure helps the user understand how much money was spent, whether when the future benefits will come, how uncertain those benefits are, all that. And the next we will go for the scope of IFRS 6. IFRS 6, what is the scope of IFRS 6? IFRS 6 applied to all the companies that include exploration and evaluation expenditures for mineral resources. Any companies who have exploration and aviation costs, they will use IFRS 6 like for oil, gases, or any other minerals. However, IFRS 6 does not apply in two situations. Only two situations where you can't apply the IFRS 6. First, it does not apply to the costs incurred before legal right to explore are obtained. Second, it does not apply to the costing incurred after the technical feasibility and commercial visibility are proved. So IFRS 6 apply only during the early exploration stages. In the scope section, one thing you need to remember that what IS 6 does not cover. IS 6 does not cover development costs, production costs, cost after feasibility is proven. Once the project becomes commercially available, other IFR standards apply. It means standards IFRS standards apply. This means IFRS 6 has limited and specific scopes. Now let's move forward for our next heading, which is impairment and exemptions. Impairment is the most important part of IFRS 6. Exploration assets can easily lose value because the project may fail, resources may not be commercially available. Therefore, IFRS 6 required companies to check whether these assets are still recoverable or not. Any entity must test exploration assets for impairment when the certain warning signs appears. These warning signs include exploration license has expired or will expire soon, no planned budget for the further explorations, companies decide to stop explorations, information must shows cost cannot be recovered, expectations cash flows are too high. These indicators show that the assets may not longer here available. Under the IFRS 6 impairment testing level, the test can be done at aggregative level. How it can not be done an operating segment. This makes impairment testing easy, more partial for exploration companies. Impairment, and now we will talk about exemptions, expectations. Now we will talk about exemptions. Now we will talk about exemptions of IFRS 6. A company may change its accounting policy for exploration cost only if the financial statement become more reliable and reliability is not reduced, nothing more or less. The rule prevent companies from changing policies just to manipulate profit. Companies should be change accounting policies only for reason, which is financial statement become more reliable and reliability is not reducing. Move forward and talk about disclosures. What is disclosure of IFRS 6? IFRS 6 require detailed disclosures. Companies must disclose their accounting policies, their amount of exploration asset, reliable related liabilities, income and expense, cash flows for exploration activities. This helps the user understand risk and uncertainty. Let's move forward and see one case study. All case study. To remember, which is mentioned in questions. The four wells are drilled every year. Each well costs $5,25,000. Only one well is successful. Now the question is how we will record this in financial statements. Under the successful efforts methods, only the successful well are capitalized. Under the full cost method, all exploration costs are capitalized. Both methods are allowed, but impairment testing and disclosure are very important. Solution: how you are recorded assets, current asset, oil and other assets and all that. And there's a liability corner. You can record in the liability as in the liability and equity, but you just need to remember both methods are allowed. Assets and liabilities, both methods are allowed, but impairment testings and disclosure are very important. Students make these common mistakes. Capitalization cost after feasibility stage, ignoring impairment direction, poor disclosure, inconsistent accounting policies. These mistakes can mislead investors and regulators. You need to remember IFRS 6 only to exploration stage. Impairment indirections are very important. Disclosure questions are common. Different between full cost and successful efforts method, which we discussed before. In the summary, while we could conclude our topic, And the conclusion of this topic to remember, no, I summarize this topic in three lines. IFRS 6 provide guidance for accounting during a highly uncertainty stage. It allows flexibility but required honesty, impairment testing, and disclosure. If you understand scope, impairment, and disclosure, IFRS 6 becomes very easy. Hope you are able to understand what I present, and now you. That's all for this. That's all for this presentation, and I hope you understand it. Thank you.